Good evening. I hope you're all fine. So we are basically going to work out cash flow statement. Previously in the other videos, we looked at how to plan for it. We basically looked at the introduction part. So we are going to look at how to prepare. So we are going to look at an example and see how we can prepare our cash flow statement. So with me here, I have an example. So normally when you get an example like this, since we looked at the meaning of cash in all the components of the cash flow statement, the meaning of cash inflows, the meaning of cash outflows, an opening balance and what it means and how we should write using a cash flow statement, what we call a cash flow budget. So we should be able to first identify the cash inflows, then we also identify the cash outflows. So based on the information that we have here from Kasuku Investment from the month of May, June, July, and August 2026. So remember I told you cash flow statement is just a projection of what you hope to happen in terms of cash receipts and cash payments. Remember, we are only looking at cash transactions. Anything that does not involve cash is not recorded in the cash flow statement. So an opening balance, of course, is the first item we write, but however, when we are adding up, we add it under the cash inflows. When you look at output, these are like things that were sold. Have given us the units and at how much each unit was sold. So those are also inflows. When you look at a loan is an inflow. Receiving the loan itself is an inflow, but paying back the loan is the outflow. When someone is receiving a loan, that is an inflow. When you're paying back the loan, is an outflow. Even the interest on that loan is also an outflow. So receipts from debtors, of course, that is an inflow. Maybe the debtors took some goods on credit, and now they are paying back the money. That's what we call receipts from debtors. Remember, debtors, we don't record them, but we record the money that was received from the debtors when they pay. The same applies to payments to creditors. Initial creditors are the people that gave you goods on credit. So when you're paying them back the money, we record it, but we don't record the creditors themselves. Labor costs, these are outflows. Purchases are outflows. A machine was bought as an outflow. Fixed costs, those are outflows. Then monthly rent receivable, these are inflows because it is receivable. It was monthly rent paid. It will be an outflow. So we are required to prepare a cash flow statement and for the 4 months, May, June, July, and August, and also with time we comment on the net cash position. So I'm going to open another page here. You hope you're able to see my other page. I'm going to use this. So I've already written my title and here it is. Kasuku Investments, cash flow statement, and my opening balance. Let me just bring in my opening balance. So the title is supposed to be written on 3 different lines, as you can see it there. 3 different lines, like that. Then I'm going to bring my opening balance. So the opening balance is 320,000. So I'll come and type here 320,000 balance put forward. So even though they give you cash or bank cash balance, please make sure you always write their balance put forward. Then we shall write our cash inflows. Where the first one we have is output. So we can see sales where in the first month they sold 800 units, second month 900 units, third month 700 units, and the last month 100 units. And they've given us the cost of each unit. So we're supposed to just multiply. So we multiply 800 by 500, that is 400,000. So our first month is 400,000. The second month is 900 times 500. That is 450,000. The third month, 500 times 700. That is 350,000. In the last month, 500 times 100. That is 50,000. So that is sales. In the next inflow, we have a loan. So we shall add loan, shall have loan, and you'll be able to see my screen properly. So loan is 500,000. The months of June and August respectively, 500,000 and 300,000. So June is 500,000. August is 300,000. Another inflow, receipts from debtors. So we have a receipt from debtors. From debtors. 100,000, 80,000, 30,000 respectively in June, July, and August. So 180 and 30 in June, July, and August. And 80,000. Then we have rent receivable. Rent receivable for China every month. Rent receivable, that is 50,000 per month. Thousand per month or monthly. Then the cash inflows are done. Let's now go to cash outflows. Outflows. So the first cash outflow here, we have purchases. We were also given a unit, so we are going to simply be multiplying so that we get how much is it per month. So we shall have our purchases. And for the first month, 700 units times 200 per unit, that is 140,000. 140,000. Then for the second month, that is 160,000. 160,000. Month is 150,000. Fourth month, is 1,000 units, that's 200,000. Then the next cash outflow, we have labor costs. Labor costs. First month, we have 150, second month 120, third month 100, first month 150,000, 150, 100,000. plus 150, 120, 100, 140. So it's supposed to be 140 here. 140. Machine was bought in July, so machine, the month of July, was bought at Ugandan shillings 1 million. Then fixed costs 20,000 per month. Fixed costs 20,000 per month. So we have identified all our cash inflows. Then just bold this. We have also identified all our cash outflows. We also try to change the font style, Times New Romans. We have our cash inflows, cash outflows. Now what we are left with is find the net cash position. So we are going to be adding the total cash inflows for each month. Then we subtract the total cash outflows for each month. So shall have total cash inflows. So here it will be 7.7,000, 770,000 on the add. And outflows here. Easy. Then we shall have our new cash. Cash outflow will be that is 290 return. So when you subtract, you get the net cash position, you get the total cash inflows minus total cash outflows. So when you subtract 770 minus 310, that is 460,000. So this 460,000, we take it to the next month as balance. The next month, and we also add it to the other month that we have. It's the total cash inflows for June, sorry. So it's 460 plus 450, that is 910. So 910,000 plus 500,000 plus 100,000 plus 50,000. Get 1,560,000. So that's our total cash inflows here. Then total cash outflows, that is 280. So this is 300,000. Subtract total cash inflows and outflows for June. We shall have 1,260,000. So this will become the opening cash balance brought forward for the next month. This is July 1,260,000. Still, when you add that, get the inflows for July 1,260,000 plus 350,000 plus 80,000 plus 50,000. Get 1,740,000. Subtract it from the outflows that we have. Total cash outflows we have 180,000 plus 100,000 plus 1 million plus 20,000, that is 1.3. So in the subtract we shall have 440,000. So it will be cash balance for August, 440,000. So we add 440,000, 140,000 plus 50,000 plus 300,000 plus 30,000 plus 50,000 with 870,000. That is total cash inflows for August. And total cash inflows total cash outflows for August will be 200,000 plus 140,000 plus 20,000, making it 360,000. So when you subtract the total cash inflows minus total cash outflows, one net cash position will be 510,000. So with that, our cash flow statement will be done. All that we are left with is commenting. So normally as you're commenting, if it is a positive net cash position, we call it a surplus. And if it is a negative net cash position, you write it in brackets. You don't put there a negative sign. Please, you don't put there a negative sign. You write the figure and put the figure in brackets. And then, as you're commenting, you call it a deficit. There was, for example, if you're commenting for May, you ask you to comment for each month. So you can say there was a surplus of Ugandan shillings 460,000 in May. When you come to June, you can say there was an increase in surplus of Ugandan shillings 1,260,000 in June. So comment. If it is a negative, call it deficit. If it is a positive, you call it a surplus. Thank you very much for listening to me. Wish you a nice time.